Hello and welcome back to the Financial Freedom Show. In today's episode, we're going to be talking about why SCHD is going to moon in 2025. If you enjoyed today's video, please be sure to hit the like button and subscribe in order to stay up to date with the latest videos we post on the channel. Be sure to check out the join button in the description for our membership if you want your name featured at the end of every single video we publish. If you enjoyed today's video, be sure to hit the like button and subscribe in order to stay up to date with the latest videos from the channel. And comment down below if you're adding SCHD to your portfolio. Love to hear from you in the comments. Hope you enjoy, and without further ado, let's get into today's video. The Schwab U.S. Dividend Equity ETF, or SCHD, has been a favorite among dividend investors for years, known for its strong track record of performance, consistent dividend growth, and its low expense ratio. As we move into 2025, several key factors indicate that SCHD is poised for significant appreciation, or as investors like to say, it's set to moon in 2025. One of SCHD's biggest advantages is its focus on companies with strong dividend growth histories. With interest rates expected to stabilize or decline in 2025, high-yield dividend stocks will become increasingly attractive compared to fixed income alternatives. Investors seeking income will flock to SCHD for its reliable and growing dividends, driving up demand and price appreciation. SCHD is designed to hold financially stable companies with solid fundamentals. It selects stocks based on metrics such as return on equity, or ROE, cash flow to debt, and dividend sustainability. With a portfolio consisting of well-established blue-chip stocks, SCHD is well positioned to outperform in an uncertain market. As these high-quality companies continue to grow earnings and increase dividends, SCHD's value will also rise accordingly. Over the past few years, growth stocks dominated the market, fueled by low interest rates and speculative enthusiasm. However, as we enter into 2025, there's a growing trend of capital rotating back into value-oriented, income-generating investments. Many institutional and retail investors are now prioritizing cash flow and financial stability, which makes SCHD an attractive investment. Dividend reinvestment is a powerful wealth-building strategy, and SCHD's strong dividend yield makes it a prime candidate for long-term compounding. Investors who reinvest their dividends in SCHD benefit from the snowball effect, where dividends buy more shares, leading to even greater dividend payouts in the future. This process accelerates wealth accumulation and pushes SCHD higher over time. SCHD has gained a massive following among dividend investors, financial influencers, and YouTube finance communities. With more investors recognizing its benefits, fund inflows into SCHD continue to rise. As more money enters the ETF, demand naturally drives up the price, reinforcing its upward momentum. If the Federal Reserve shifts towards a more accommodative monetary policy in 2025, it could provide a broad boost to the stock market. Lower interest rates would not only make dividend stocks more attractive, but also stimulate corporate growth, benefiting SCHD's underlying holdings. A Fed pivot could be a major catalyst that sends SCHD soaring as well. Unlike many high-growth ETFs that suffer during market downturns, SCHD has demonstrated resilience due to its focus on strong, cash-generating businesses. Even in times of economic uncertainty, SCHD's holdings continue to pay dividends and maintain stability. This defensive quality makes it an ideal ETF for investors looking to hedge against volatility while still capturing upside potential. Dividend ETFs have been a long favorite among income investors, but as we head into 2025, they're becoming even more compelling of a choice. With market uncertainty, economic shifts, and evolving Federal Reserve policies, dividend ETFs offer a balanced approach to generating consistent income while still benefiting from a long-term capital appreciation. Here's why dividend ETFs are set to shine in 2025. The first reason is their stability in a volatile market. Markets have experienced significant volatility in recent years, with inflation concerns, interest rate hikes, and geopolitical tensions impacting investor sentiment. Dividend ETFs provide stability because they focus on companies with strong fundamentals, consistent earnings, and a history of returning capital to shareholders. This makes them an excellent choice for investors looking to minimize downside risk while still participating in market growth. One of the biggest advantages of dividend ETFs is their ability to generate passive income regardless of market conditions. With interest rates expected to stabilize or even decline in 2025, dividend-paying stocks become an even more attractive alternative to bonds and savings accounts. Investors looking for consistent cash flow can benefit from dividend ETFs, which distribute earnings regularly and provide a hedge against inflation. Many high-quality dividend ETFs focus on companies that consistently increase their dividend payouts. This dividend growth strategy allows investors to benefit from compounding over time. When dividends are reinvested, they buy additional shares, leading to an exponential increase in the income and total returns of the ETF. ETFs like SCHD, VIG, and DGRW are prime examples of funds that capitalize on this wealth-building effect. Traditionally, investors seeking income relied on bonds, CDs, and high-yield savings accounts. However, with inflation still being a concern, bond yields may not be enough to keep pace with rising costs. Dividend ETFs offer a better alternative by providing competitive yields along with potential capital appreciation. Unlike bonds, which are sensitive to interest rate changes, strong dividend stocks tend to outperform in various market environments. Individual dividend stocks can be risky if a company faces financial trouble or cuts its dividend. Dividend ETFs reduce this risk by holding a diversified portfolio of dividend-paying stocks across various sectors. This diversification minimizes the impact of a single company's performance, making dividend ETFs a safer choice for long-term investors. Many dividend ETFs distribute qualified dividends, which are often taxed at a lower rate than ordinary income. This tax advantage makes them particularly attractive compared to other income-generating investments, especially for investors in higher tax brackets. Additionally, dividend ETFs held in tax-advantaged accounts like Roth IRAs can maximize tax benefits even further. Dividend ETFs have been gaining popularity among both institutional and retail investors. With more financial advisors and fund managers recognizing their benefits, capital inflows into dividend ETFs are increasing. This rising demand continues to contribute to price appreciation and reinforces their strong performance heading into 2025. Historically, dividend-paying stocks have outperformed non-paying stocks over the long term. Many of these companies have strong cash flows, high profitability, and a disciplined approach to capital allocation. As more investors prioritize quality and income in uncertain times, dividend ETFs stand to benefit. With their combination of reliable income, diversification, tax efficiency, and long-term growth potential, dividend ETFs are an outstanding choice for investors in 2025. Whether you're looking for passive income, a hedge against volatility, or a long-term wealth-building strategy, dividend ETFs provide a solid foundation for financial success. With a combination of dividend growth, high-quality holdings, increasing investor interest, and favorable market conditions, SCHD is well positioned to moon in 2025. As investors continue seeking reliable income and long-term wealth-building strategies, SCHD will remain a top choice, making it a prime ETF to watch in the coming year. If you enjoyed today's video, please be sure to hit the like button and subscribe to the channel in order to stay up to date with the latest videos we post on the Financial Freedom Show. Feel free to comment down below if you're buying SCHD in your portfolio, and check out the description for the join button for our membership program. You can have access to our private Discord as well as have your name featured at the end of every single video we publish. So if you enjoyed today's video, remember to hit the like button, and I'll see you in the next one. Thanks for watching.